Hello, everyone, and welcome to another edition of the Mouthy Money podcast. I have an Antipodean guest today, which I'm very excited to introduce to everybody on the podcast. Her name's Hope. Hope, hello.
Hi, thanks for having
Hope.
me.
No, my absolute pleasure. Hope. Before we kind of talk about why you're here today, just tell us a little bit about yourself, what your background is, and what you're doing on the Mouthy Money podcast.
Sure. Well, yeah, thanks so much for having me. I have lived in the UK now for about 6.5 years, and that all started with wanting to take advantage of being a British citizen through my mum and come out and live in a city like London where financial services is such a dominant industry. So I guess that's a good kind of place to start the about me is there. I ended up coming to
Yeah.
live in the UK actually a little earlier than expected. One of my best friends moved out, so I brought forward my plans to align with her, and I thought that I would only stay for a year. It's now been obviously significantly longer than that, but I'd worked as a financial advice journalist in Australia, and I was lucky enough to land a more senior version of my role when I first came over to London, and it's all just, I guess, built up progressively from there.
So I think listeners will discern from the lilt in the accent already that you are an Australian. Obviously, Lou said it, Antipodean there at the start. Mouthy Money's got a bit of a relationship with Australia now. We do actually have we have a contributor called Sophie King, she's an English personal finance journalist, but actually decided to pack in her career in London and do the opposite to you. Hope she's gone off out to Australia and she writes stuff back to us about life out there and backpacking and getting jobs and that kind of thing. But you've had very much the reverse experience of that. What it's like as an Aussie coming to the UK. My kind of experience of Australia is I went there years and years ago on a rugby tour when I was still probably about 16 years old as a kind of classic, you know, young Brit going out there type thing. And then now I will confess that I, myself and my wife, are big fans of Australian television. So we like, maths is obviously the one I think that's probably most ubiquitous. Sorry to be bringing it up. But Australian MasterChef got us through the pandemic, which was actually really, really good and really enjoyable. Anyway, this is a bit of a non sequitur. The reason we've got you here today, Hope, and I'm not,
Yeah.
is we want you to tell us about what life is like for an Aussie in the UK and what the real differences are between kind of the ways in which Australians and Brits think about their money, and then obviously we're going to talk a little about pensions, which is your kind of real
Mhm.
expertise. So just let's get started with that then. What are some of the kind of big differences that you felt in terms of people's money and lives in that sense between the UK and Australia?
Well, I mean, to go back to what you were saying a second ago, I'm afraid I'm very unhelpful when it comes to Australian TV, especially things like maths, because I have been away for a long time. So I will caveat all the answers I give in this podcast by saying that. Obviously, it's been quite a while since I
Sure.
was there, but still, there is so much that I feel like I notice, especially when it comes to some of the biggest differences, because it's interesting in a lot of ways, the financial systems are set up, managed, and regulated in quite a similar way in both countries. And I think where the differences really show themselves is in mindset. So, of course, there's always this joke in the UK that people don't like to discuss money for a whole host of reasons. But I think it's a real shame and it ends up actually being quite negative because people often feel completely in the dark where their financial situation is concerned. And I think, there are ways you can have open and constructive conversations about money and finances and savings without getting too personal or getting into the nitty-gritty details. But I think those conversations are almost entirely closed off in the UK, which is, counterproductive and very different to how money is spoken about in Australia, and the way people think and feel and enjoy money is very different in the two countries as well. And obviously I need to do some generalizing here, but I've
Sure.
really observed that, people in the UK live, I guess, more in the present and they enjoy their money more. I love, that people celebrate payday in the UK with like a cheeky dinner out or buying something that they want. I'd never heard of that before moving over here. I think in Australia, there's a lot of pressure to save, and it is a very expensive country, but also I do feel there is a stigma, I suppose, to cruising along or not having the next big savings goal lined up or not knowing what you want to do next financially or having, a strategy that's going to somehow move you forward. So, yeah, I'd say the biggest differences are how people communicate about personal finances, but then also how people prioritize.
I think I think you're right. It's difficult to just generalize so much because obviously everybody's got their own thing going on, but there are kind of things that are culturally thematic, and I find it really interesting that you say that Australians have more of a I need to be saving for the future sort of mindset because that almost runs to things like how pensions work out there, right? Like
Mm.
we talk about it here, how basically the UK pension system is just Australia's pension system, but 20 years ago, sort of thing, almost, where we're constantly taking a lead. It seems that Australians have much more of this attitude to let's save for the future, and that's developed into a pension system that is much more, much further ahead, much in that sense, isn't it? Is that right? I'm not being too general there, I guess, but.
No, I think that's true. I think it's just a little bit different. I mean, there are good and bad things, to be honest. I mean, if I start with sort of the downsides, I think it's very difficult to separate pensions policy from politics, and then
Mm,
again separate politics from society. And like you said, there are a lot of cultural similarities between the UK and Australia, but I think there are actually very few societal similarities, say beyond just people's values and principles. Australia doesn't carry, I suppose, the same legacy burdens that the UK does when it comes to societal structures and distribution of wealth that is so intrinsically linked to political beliefs here and also
mm,
political expectations in the UK. I mean, Australia has a far smaller benefit system, for example, in every sense, and that pulls right through to the fact that there is effectively no state pension in Australia. It's very, very strictly assets and income tested, so it's essentially reserved for people who have been unable to work in their life or whose working ability has been very severely limited or compromised for whatever reason, or they have very complex personal circumstances. So I suppose there isn't that same expectation that the government will provide for you or that it should provide for you. And, I'm not saying that that's wrong or right. It's just very, very different to how I think I see people speak about the ways in which they want the government to move the dial on state pensions or intervene with workplace pensions in the UK.
yeah, I think a really interesting point, and I think you also want to get too much into the history of it, but you look at a country like Australia or New Zealand, and even other places like I guess like Singapore and Hong Kong or wherever it might be that the kind of newer countries, newer states, and they get to look at places like the UK and say, okay, well, how do those countries do it? And actually, they look at what we do, and it's kind of like, oh no, it does. It's not actually doesn't seem like a fantastic idea. So they don't do it, and they're better off as a result. And there's that kind of. I was really interesting about the state pension. I had no idea that there is basically no, and it's such a big problem here. So it's like
Mm.
imagine kind of not having that as a problem, sort of thing. It's very interesting. Um, in terms of the kind of like thinking about pensions specifically, because the one big sort of policy thing at the moment, well, it was at the last budget. It might disappear now because of the election, but we had this whole thing about pot follows person, and that's quite normal that is the norm in Australia, isn't it? Where it's kind of like your pension functions more like a bank account in the sense that you have one, and then you give your details to your employer when you move, don't you? Is that right, more or less?
Yeah, definitely. So, I mean, that is certainly a takeaway. I think that the UK can grab from what Australia is doing as it continues to develop its DC model. I mean, it makes it easier that we don't have a defined benefit pension system in Australia. It's very DC oriented. There's been auto enrolment and compulsory employer contributions since the late 1980s. So
Hmm.
actually, when you bear that in mind, I don't think it's always a good thing that the UK does look to follow Australia. I think there are almost too many differences and variables at play to effectively emulate what has been done there. You know, what's right and effective in Australia is not necessarily what is suitable for Britain or what would work here. But it's so interesting that you brought up Portfolio's member, because that's been something I've been really passionate about covering in my time here as a journalist and the
Hmm.
development of that. Because for me, coming from Australia, I just think it's absolutely ludicrous that your average worker has five or more tiny pension pots that aren't being actively managed and end up being eroded by fees or, you know, forgotten about entirely. Like, you know, whoever thought that that was an easy way to go about things? You know,
Yeah.
it's so much simpler when you can just have, I guess, that stewardship over your own savings, and you know, you're the one that has to make an active decision whether something comes with you or whether it doesn't. You know, I think if we want people in the UK to be stewards of their own money, there needs to be more ways to make that easier. And that is somewhere where Australia has done a great job with pensions policy. So something that I'd say is worth following.
It's funny. It's funny. Oh, we had David Henderson, who was from Penny, which they do pension tracing,
Mm.
and they'll track your kind of lost pensions down for you and that kind of thing. And we were talking about the same thing, where it's kind of like, you know, we've ended up in the situation where people have all these small pots because the system was set up in that way, and here's a fix for it. And then the thing that surprised, because I agree with you totally. I think the pot follows member. I think it's a good idea. Like, just do it. It makes sense. But when they announced it, there was a lot of pushback, and I was kind of like,
Mm.
why aren't we being a little bit more big picture about it? I don't know. Like, you work more on the coalface with that kind of area than I do. Um, what did you in that pushback? You know, what did you feel? How did you feel seeing it? Because for me, it was mystifying.
It was really surprising to me as well, but I think what I noticed was that, you know, different players in the market were coming at it from their own perspective of how it would
Hmm.
affect them rather than how it would affect the saver. You know, there was a lot of discussion about how much more work this would throw up for, you know, different players or providers in the industry, how much everything was going to cost, how much more technology investment it would need, whether there were concerns around data or compliance or GDPR or things like that, which are all very valid points. You know, if you work in that industry, you always want to know how much that's going to move the dial for you and whether you can factor that into, you know, what you do. But I'm with you. I think thematically as an idea, it's wonderful. I don't know why anybody would want to protest against it, really.
Yeah, I think one of the criticisms I saw was that, for me, this feels like, I mean, tell me as an Australian if I'm wrong, but it feels like quite a British conceit where some of the criticism was, well, it just means the best informed and the wealthiest people are going to be able to do what they want with their pensions, and everyone else is just going to get left behind. And I was just kind of like, it's kind of like the wrong way of looking at it. It's like, why are we worrying about what they're doing? Let's worry about most people are going to be doing and how we sort it out for them. I don't know. Is that a British thing? Like, we have a bit of a mindset about that. I don't know.
I
Putting it
think so.
out.
I mean, I think that's one of the biggest cultural differences. And obviously, that does
Yeah.
play over. I mean, Australia has a much greater culture of savings, but there is a strong do it yourself, no one else would do it for you mentality. And
Hmm.
actually, it's not just a mentality, it is a reality. Like with what I was saying about the state pensions and about benefit systems in general, we don't have those safety nets from the government if something goes wrong, which is really scary. You know, so from a young age, you're really conditioned to really take an active role in your own finances because there's nobody that's going to do that for you if you don't. So you're right. I think it's sort of a systemic way of thinking, but you know, it's really difficult to get out of what you're used to in that sense.
What is think of it? What is the kind of school age education around personal finance and that kind of thing? What's it like in Australia? Is it good? Is it? I mean, it sounds to me like there's already a mindset there that helps that, but because I mean, it's not good. You know, not we talk about it a lot. It's not great in the UK. I don't know. Do they teach it in schools much better?
They do, and it's interesting because I always thought that the education you get around finance at school in Australia is quite limited, and there was a lot more we could do. And then I came to the UK and realised that what we did was a lot better than nothing, which is what seems to be the case here. Which is why it's great that we've got so many charity organisations now going out and doing that really fundamental work in schools and getting in there while children are young and reframing things and recommunicating things in a way that is positive and helpful. So when I was at school, I started financial education when I was about 8. I think it would have been year 3 or year 4, and it was reasonably basic, but it was really helpful. Especially I can remember quite clearly learning about compound interest at school when I was that age, and about putting into practice the theory of compound interest, I suppose, in ways that are really helpful when you're a young child, and taking that back home and saying you can have this thing now, but then learning if you wait a little bit longer it's going to be so much better. And they're messages that are really positive for children can get on board with that. So there are ways that you can make that education fun and relatable, and I think it worked quite well in Australia. We also have programs at regular public state schools where big banks come into schools and you get a personalized money box and you learn about savings, and you can get a little debit card that's got your name on. And that's always been a big component of state education in Australia, are the big banks coming in and teaching children from a really young age. So you're about 6 or 7 when that happens in school. So there is a lot more going on there than there is in the UK, but still a long way to go. That didn't carry through into high school and learning about anything that was more complex than basic banking and budgeting. So there is a long way to go.
Yeah, yeah. Interesting. I think it feels like it just adds to the list of things that we could probably learn from Australians on various things. Um, so I think the I'm not sure if we've got we're sitting on some kind of exclusive here, but you are actually heading back to Australia now, aren't you?
I am,
Um,
yes, next month.
yeah, next month. So we're going to be losing you from the financial journalist community. I mean, I don't want to speak for everybody, but we're very sorry to lose you. Uh, what are some of the things you're going to miss about the UK? I was going to start with, and this doesn't have to be a money question necessarily, but money if you like.
Okay, well, I could do this in 2 parts. I could do a
Yeah,
money
go on.
thing, maybe something else. But I think in the finance sense, I'll
Mm,
actually really miss the digital innovation that the UK is actually really good at. Be that
mm,
challenger banks, online banks, or even products like ISAs. The banking system in Australia is a little bit more traditional, a bit more conservative, and actually has a lot of catching up to do in that sense. So I'll miss the ease and the opportunities that you get in the UK actually to really self manage your finances well. But outside of that, and outside of the obvious answer of friends and family, I think the biggest thing I'm going to miss is the travel. So that proximity to Europe was one of the main things that drew me to the UK, as I'm sure is the case for many others. And I've got so used to planning my savings goals and my lifestyle around spending weekends in Europe. So it will be a big shock to the system, I think, to get back to being quite internationally isolated.
you've still got some stuff sort of nearby there, don't you? I suppose it is probably a bit of a longer flight to somewhere like Indonesia or Malaysia and those kind of places, isn't it? Or
It's a
even like
lot further than
Thailand.
you think. So we have New
Yeah.
Zealand close. So New Zealand's only 3
Mm.
hours. But aside from that, it's 9 hours to get from where I'm from on the East Coast in Sydney to anywhere in Asia. So it is a long
If
way.
you're going to New Zealand from Australia, it's because you've got to be in it for the hiking or the skiing or something, wouldn't it? You're not going for the
Exactly.
sunshine.
Exactly.
On the challenger banking thing, I think that's is really interesting because we are really like good at that. Um, and that kind of the choice is available. I remember explaining it to an American friend of mine once about how, oh yeah, no, so I can do this with my Monzo and that with my Starling, and I've got about 4 different accounts, and he was kind of like, what, how does this even Um, are there any other areas that I think we do well? I mean, because the sector in general is bigger here as well, isn't it? So there's more. Would you say there's more going on generally? I don't quite know about Australia really in that sense.
I think so. I mean, the UK is very innovative. Certainly, the financial services sector is innovative and always has been. You know, the UK has long been known for finance, so it's not surprising to me that there is a lot going on here, and there's a lot of lessons that Australia seems to be learning, and ideas that they're adapting. It's just happening 5 years after it's happened in the UK. But certainly something like Monzo, I will really miss. I mean, that is such a go-to tool almost, if you want to describe it that way, especially in living in a big city like London. The ability to split bills or request money or do things in live time with friends, or if you're in a big group, is just so fantastic. I feel like it's really changed the game, and when I go back to Australia, I have to really take a deep breath before I remember that they don't want to split your bill for you, or that I've got to get a whole load of details from somebody before I transfer the money, or things like that. So yeah, that is a place I think I've always felt like the UK shines and does well in comparatively, if we're thinking about Australia versus the UK.
Yeah, and I'm guessing you're going back. Are you going to do journalism again in Australia? Is that what the plan is at the moment, or?
Yes, it will be, and I will still vaguely be in the finance world, but in a little bit of a different space. So I'm actually going to work in property and mortgage journalism. So that will be a new
Okay.
challenge for me. I haven't done that before, but Sydney is one of the most expensive cities in the world for real estate, and obviously against the backdrop of a very strong economy compared to other parts of the world, which is very fortunate. So there's a lot going on in that space I'm looking forward to sinking my teeth into.
I always think, what do we do? What do we do in the UK that's good that we could export elsewhere? And it's like, could you send go to Australia and emigrate and become the Martin Lewis of Australia? Maybe that's what you need to have a go at. Unless Australia has a Martin Lewis, I don't know.
Not quite in the same way. We have a couple of people that do elements of what he does, but there is no one
Yeah.
big ahead. So opportunity available there for anyone interested.
It
Maybe.
sounds right for it. I mean, it sounds to me like Australians have got their heads screwed on when it comes to money. I mean, more than we do. Like you said, that kind of go and have a big dinner with our paycheck type type mentality. Um, that's brilliant. Thank you, Hope. Before I let you go, we ask every guest on the show now a set of the same questions. So I'm going to just go through those with you. I have a funny feeling we might have got the answer out of you already for this first one. But what is one money gadget, tech, or app that you couldn't live without?
I think were you expecting me to say Monzo?
I was maybe, but then you were perhaps going to have to say that you're going to have to live without it anyway because you're going back to ours. But I
I
don't
am
know.
genuinely going to have to live without it, which is very sad. But that was something that popped into my mind actually. But no, for me, the answer actually is really easy, and that is the money transfer fintech company Wise. So they used to be called
Okay.
TransferWise.
Hmm.
Um, and TransferWise is probably the name that a lot of people may know them by, and it's been my go-to travel debit card and international transfer system for probably like 5 years now, and it's FCA regulated, and it's really user friendly. Simple app allows you to open multiple bank accounts in almost any currency in the world. So from the UK, you send money to your UK Wise account, and then you can transfer it pretty cheaply and extremely quickly into whatever currency you want, and then just use it as a regular debit card. And it's got really low conversion fees, and the speed is honestly amazing. I've been in the queue to buy something in a foreign country and transferred and converted money to myself in 1 to 2 minutes. And aside from being my trusty travel companion and with all the trips I've done in Europe while I've been living in the UK, it's also made going back and forth between Australia and the UK and sending and receiving and transferring money between the two countries just super simple while I've been here. So that I could definitely not live without.
Yeah. Do you find yourself still kind of balancing? I guess because you're going to end up having like pension there, pension here, this there, and that there. Do you find yourself balancing between the two countries still quite a lot in that sense? Like, um,
Yeah, definitely.
yeah.
It's a long process to move
Mm,
countries in an administrative sense. I would say it probably took about 3 years to fully close off from Australia when I moved, in terms of, because we have to do our own tax returns in Australia. You're required by law to go to a tax agent and do it yourself. So, to stop having to do things like that, that all took quite a few years to get settled. But for me, I'm quite lucky. Both of my parents are from different countries and both moved to Australia. So kind of having to manage your finances and your affairs in multiple places is something I've always been familiar with growing up. So it's not too daunting. And of course, technology just makes it easier and easier every single year. So I'm very lucky with that.
can you move something like a pension? I guess you can use QROPs. They're called, aren't they? Is that what you
Yeah,
do? Can you even do that?
qualifying
Was
registered overseas pension schemes, you
yeah.
can, but
And
it's very, very complex. And it's a kind of
mm,
thing that it wouldn't really be worth doing unless you had a lot of money to move over. So for me, for my plan, for my workplace pension, mine is obviously all in one pot. I've kept them rolled together because that's just what I'm used to. I will just have to leave that until I'm pension age. And then when you are pension age in the UK, you can have that. You can withdraw into any bank account. It doesn't have to be in the UK, which is really helpful. But yeah, that's not something that I can bring to Australia with me with any sort of ease. I've not worked here
mm,
long enough to have accumulated the kind of workplace pension wealth that would make it worth it. But knowing those sort of things is really important. Also, I'm only a couple of years away from being eligible for partial state pension in the UK, so I've had to do a lot of reading on how I can contribute to national insurance even though I'm not in the UK, if I want to be in a position where I can draw on that even if I never come back to live here. So there's a lot of different things to get your head around, and you're looking at state, personal, and workplace when it comes to pensions. So there's a lot in the mix, but I think I'm mostly there in my finance organization. Fingers crossed.
God, yeah. The state pension thing must be complicated as well because it's like if you might, yeah, I'm not sure you probably, the door might be open to coming back one day, and it's like, well, if I don't contribute while I'm away and I come back, then I'm not going to get it, kind of thing. It's real, it's tricky stuff. I must admit, I've never
Mm.
really thought about it, but fair play to you for taking it on. That's admirable. Um,
It is difficult. You have to be aware of it. And actually,
hmm,
my husband is British, but he just the other year passed eligibility to have a full state pension. And that's really good because if he had been just knocking on the door of that, but not quite there, we would have delayed our move, because logically it's just such a waste, to have worked so hard for so many years and then to not be able to see that benefit. But that's the kind of thing, unless you're maybe working in this industry or you're particularly savvy, that you just might not think of. So, we're both in a good position working in finance that those things tend to occur to you, and then you can do a bit of research and find out what's best.
yeah, definitely. Right. So then the next question on the list was a financial company that you've had a good experience with.
So there is this superannuation firm in Australia called Prime Super that I was auto enrolled with as a teenager in my first casual job. And of course, like we were saying before, we've got Portfolios member in Australia. So I took that pot with me through a few different short term and casual roles and actually through right into my first full time role as a journalist. But it had just really, really good communications tailored to teenagers saving when I was younger.
Really?
And I was actually sharing this story on another podcast recently about an incentive that this firm ran back when I was maybe about 15, and it was aimed at members who were under 18. And I don't recall the exact specifics, but it was something along the lines of topping up your super with an extra $100 before the end of tax year in order to be sent a free pair of headphones. And obviously, as a teenager, you don't approach that offer with the same logic that an adult would, where you realize you could probably pay less than $100 for the same headphones yourself. But, that's why it was designed for savers between 14 and 16 and why it was effective. It's positive psychology. And I really specifically remember how good it felt to be served an offer, particularly for my age group, by a big super fund and feel noticed and feel like they were targeting me in a way that was of interest to me. So that is a really good experience that has stuck with me for a long time now.
It's so interesting because it's such a can of worms to open here in the UK, where it's like the way that financial companies talk to people. It's like they're talking to a 75-year-old or something like that. They're often not talking to the audience they think they are, or they just can't be bothered with trying to frame things in a way that makes sense to a 22-year-old who's just started their job, or fresh out of uni or whatever. So that's really interesting. I'll add it to the list of things that we should be learning. um, unfortunately getting long now. So we're going to flip the next question. A company you've had a bad experience with. And I will caveat, and I do caveat for this for guests, if you don't feel like naming and shaming, that's fine. We can keep things general.
I definitely have a story here, and again, it's workplace pensions related. So before I moved to the UK, I actually rolled over my superannuation pot to a different provider that was an arm of my bank in Australia. So aside from having good performance and suitable arrangements fees wise, given I was going away, the fact that it was actually part of my bank was a huge plus for me, because it meant that I could easily track and manage my super from my banking app. So authentications for apps and websites weren't anywhere near as good 7 years ago as they are now. So it felt like a really good way to keep my super front and center in my mind, actually. And I think being able to see your pension savings at all times is a really good way to cement how important long-term saving is. I have the same thing in UK. So I bank with Lloyds, and my workplace pension pot, they're all rolled together with Scottish Widows. So I can always see how much I have every single time I log into my app, which is a little bit scary, but also a good thing, I think. But back to my superannuation provider in Australia, it ended up, this super fund, being really badly affected by COVID and some market turbulence, to the point where the performance of its funds got so bad that it was actually amalgamated into a larger super fund. And that was really difficult to manage from overseas, because there's quite a lot of limits on what financial information you can access when you're outside of a country when it comes to to anything, to pensions, tax, banking. There's a lot of triple factor authentication that's required, or an Australian mobile phone number is needed, and there are ways to manage all of that with eSIMs. But historically, while I've been living here, it's been really difficult, and that was my worst experience, because I couldn't watch any of the information webinars for customers about the superfund rollover. They'd be at 3 a.m. and they weren't available on demand, and I ended up actually just sort of dropping through the cracks a little bit as everything was rolled over. So that was a challenge, and I just think it's so vital that large financial institutions that have a global presence, really invest in solutions in ways that mean that their customers outside of their home countries get to feel treated equally. There's so many people that have financial interests in more than one country, and there just doesn't seem to be ways and methods that different institutions talk to each other, even when it is the same institution. So that rollover process was really tricky to deal with.
Yeah. The time difference alone must make that a nightmare to handle. Particularly if you're trying to get on the phone with somebody or something like that, and call center hours and those kind of things must be, I can imagine, not easy to deal with.
Yeah, lots of time on the phone at midnight.
I don't envy that. I'm sorry. Right, let's. So wrapping up, and this doesn't have to be in the strictest regulated sense, but where or to whom do you turn to for financial advice?
Well, yes, talking about things that aren't regulated in the strictest sense. Obviously, I'm in a very unique position as a trade journalist, in that I know hundreds of financial advisors in the UK, and of course, they can't advise me in the formal sense when I'm not their client, but their guidance or odd suggestion on things over the years has always been greatly appreciated, as has, I guess, the ability to build up a contact base and then have been signposted to other people or providers within financial services or, industries connected to that a little bit more widely. So I'm very fortunate over the years that so many people I've met throughout the course of my career have been so generous with their time and help. And it's really important to me that I'm always seeking out the experts in the field. That's something that we talk a lot about in the financial advice industry, is the fear of people that aren't regulated or aren't qualified coming in and grabbing the market share and informing people in ways that are really unhelpful. Whether that's finfluencers on TikTok or just anybody speaking that doesn't come from a proper, learned, regulated place of knowledge. So I try to live that out whenever I have a question for myself and go to the people that, are actually qualified to answer. And I'm very lucky to have many of those at my disposal because of my job.
Yeah, it's the sneaky. Oh, we've got a reader question. Can you answer this? I'm the
Exactly,
reader.
exactly.
I'm the one. I'm the one who is asking the question. Please help. Brilliant. Thank you, Hope. Thank you so much for joining us. It's really, really interesting. I think, yeah, and I do wish you the absolute best of luck. I hope you can maybe once you're settled in Australia, you drop us another line and let us know how you're getting on, because it would be lovely to catch up again at some point in the future. So thank you for joining us.
No problem. Thank you very much for having me.
And thank you, everybody, for listening again. Obviously, you can catch us on Apple, Spotify, and now YouTube as well. For everything else, Mouthy Money, go to the website, subscribe to the newsletter for the weekly updates, and that's more or less it. So thank you, everybody, and goodbye.